Cleveland, Ohio, where affordability meets opportunity and your dream home is closer than you think. I'm Brian Evans, a Zillow Premier agent with Century 21 Asa Cox Homes. And I'm not just selling homes, I'm helping you unlock the best of what the city has to offer. First time buyer, relocating, seasoned investor, whatever brings you here, Cleveland's booming market has something for you. And I got the expertise to guide you through every step of the way. Want to save thousands in your pocket this tax season? If you own a home in Cleveland or about to, this video will be your secret weapon. And I help countless homeowners unlock hidden tax savings they didn't even know existed. And today I'm revealing the biggest home-related tax deductions. Whether you just bought, renovated, or been paying your mortgage for years, these ain't just minor savings. I'm talking about serious cash back in your pockets. But before we dive in, two quick things. Follow me for Cleveland real estate tips that actually save you money, and scan my QR code to check out my Zillow profile, browse listing, read reviews, and let's get into your perfect home and tax situation. Let's dive in. Your wallet will thank you later, and we're going to get into it right after this. First, let's talk tax deduction versus credit, because most homeowners mix these up. Deduction reduces your taxable income, which means you owe less in taxes overall. An example, if you buy a $300,000 home in Cleveland Heights, that mortgage interest is deductible. Another Cleveland perk is Ohio property taxes are below the national average, but you can still deduct them. Tax credit provide a dollar for dollar, quote unquote, free money reduction in the amount of tax you owe. They are much more valuable than deductions because they directly reduces your tax bill rather than lower your taxable income. An example of this is installing solar panels on your home. The 30% federal tax credit means $19,000 back on your $30,000 system. And an Ohio perk means that energy efficient HVAC upgrades qualify for both state and federal credit. And as a pro tip, credits are golden. Always claim these first. Ohio follows the federal standardized deduction approach for state income taxes. This means you do not itemize deductions on your Ohio state return. You only take the state standardized deduction, which is based on your income. And so how does this work? Ohio does not allow you to itemize deductions such as mortgage interest or property taxes. Instead, the state automatically applies a standardized deduction based on your adjusted gross income, AGI. If you buy a home in Ohio, you cannot deduct mortgage interest or property taxes on your Ohio state taxes, only on your federal return. Now, should you take Ohio standardized deduction or itemize? Let's do the math. You can only claim most home-related deduction if you itemize instead of taking the standard deduction. For 2025, your standard deduction is $15,000 for single filers or $30,000 for married couple filing jointly. If the total deduction exceeds the standard amount, then itemizing is the better option. As far as mortgage interest deduction, if you itemize, you can deduct interest paid up to $750,000 on mortgage debt. This applies to both primary and secondary homes, but not rental property. Your lender will send you a Form 1098 with total interest paid for the year. So you can add that to your taxes. When it comes to property tax deduction, it's a SALT cap rule, meaning you can deduct up to $10,000 in combined state and local taxes, including property taxes, state income taxes, or sales taxes, whichever is higher. If you live in a high tax state, this cap might limit your deductions. For those of you who have home equity loans or a HELOC, this interest is only deductible if the loan was used for the following: home renovations, a new addition, other substantial home improvements. However, if you use a loan for anything like debt consolidation, vacation, or non-home expenses, you cannot deduct that, unfortunately. Then we have these energy efficient home improvement tax credits. You can claim a 30% federal tax credit up to $3,200 per year for solar panels, energy efficient windows and doors, upgraded HVAC system. And this is a credit, not a deduction, which means it directly lowers your tax bill. For you home sellers, capital gains exclusion for home sales. If you sell your home, you may not owe capital gains tax if you lived in a home for at least 2 of the past 5 years, Your profits is under $250,000 single, or $500,000 if you married. However, you want to keep detailed records of your major home improvements. They can increase your cost basis and reduce your taxable profit. For you self-employed home owners there, then we had the home office deduction. If you are self-employed, you may qualify for a home office deduction if the space is exclusively used for business, if your primary place of business. And two ways to calculate this: either a simple method, $5 per square foot up to 300 square feet; regular method, which is prorated portion of rent, mortgage, utilities, and insurance. And it's very important that W-2 employees cannot claim this deduction under current tax law. It's not deductible. While most home improvements ain't immediately deductible, they still can impact your taxes. Major upgrades like kitchen remodels, roof replacements, and home additions increase your home cost basis, reducing potential capital gain tax when you sell. Energy efficient upgrades like solar panels, efficient windows, and HVAC systems qualify for a 30% federal tax credit, up to $3,200 per year. If improvements are medically necessary, such as wheelchair ramps or stair lifts, they may be deductible as medical expenses. Lastly, if you take out a home equity loan or a HELOC, interest is only deductible if the funds were used for home improvements, not personal use or personal expenses. So the key takeaway is the key to maximizing tax savings as a homeowner is good record keeping. You definitely want to save all receipts for home improvements, mortgage interest, and property tax payments. While you definitely want to work with a tax professional to make sure you're getting every deduction you qualify for. And if this information will be valuable for you, don't hesitate to follow me for more information and zap my QR code so you can follow me on Zillow, and you can definitely reach out to me that way as well. And my information is on the bottom of the screen. You could call me, text me, or shoot me an email. Either way, I look forward to helping you out and helping you learn more about Cleveland. And thank you for watching, and see you in the next video. Take care.